Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody. Today we will have a lot to discuss on the euro currency because now the time has come to look at the monthly chart. We guys, every time when we are preparing the weekly research, we every time take a look at the monthly time frame. And if you remember, on the previous week we said that the nearest destination point of the euro currency will be around 137.70 area, 138.30, because this area is really a hard rock resistance for the market, because here stands the 618 extension of the big ABCD pattern on the monthly time frame chart. Here you won't see it, but if you take a look at the monthly time frame, if you will read our weekly monthly analysis, you will understand what I'm talking about. Second, 137.74 is the yearly pivot resistance 1. And recall the price action within the current year. Market has in the beginning of the year, market has shown the retracement right to the yearly pivot point around 127.50. If I do not miss something, it has coiled around for about a month and then has started move to the upside. This is absolutely normal price action when we are speaking about the pivot points. And now market has reached the next destination that is usually should follow after the testing. If market has tested the pivot point and continue move to the upside, that is the pivot resistance 1. And here is the yearly pivot resistance 1. Surely this not just the number 137.74. This is mostly an area. Besides, this area could be rather wide, because when the market stands around the yearly pivot, it has pierced it for approximately 100 pips to the downside, and in fact we still treat it as the support, and we can't say that this means that market has passed through the yearly pivot. It just coils around. So the 137.74 is just the calculated number, but the area around this mark could be approximately 100 pips to the upside. But that's not yet. That's not all yet. Second moment is that here is the major monthly resistance 138.32. So an area between 137.70 138.70 is the really hard rock resistance, is high time frame resistance. Speaking about the daily time frame chart, also we have the completion point of this ABCD pattern to the upside, and that is creates an agreement with this major resistance on the monthly time frame, slightly higher. Also, take a look at our weekly analysis on the weekly time frame chart. You'll see that target point of the butterfly sell stands slightly higher than the 138.30 area. So that will be the real hard rock resistance. And as we said in our previous research, we said that it's too early to speak about the appreciation of the euro currency compared to the US dollar. And in fact, I think that it's the positive from the euro standpoint of the recent data of the non-farm payrolls release. I think that this will be a bit overestimated, because a lot have been said concerning that the payrolls has been released 40,000 smaller than it should be, but not very broadly was said concerning the revision of the August data. They were revised to the upward for the same 40,000. And in fact, by the result of the couple of months, we have the equal number of non-farm payrolls compares to expected data. So in fact, they have been released as they should by the calculation of the economists. And I think that yesterday's splash to the upside, it's a bit overestimated reaction on the, as it has treated yesterday, negative data for the United States dollar. I think that this non-farm payrolls release was not as negative as it looks right now by the reaction of the financial markets. And I think that it's too early to speak about the victory of the euro currency. I think that in the nearest future, since we have also the very significant resistance right here, that could be the reversal point for the euro currency to the downside. Besides, do not forget that we will get the gross domestic product preliminary data right before the FOMC meeting at the end of October, and anything could drastically change within the week and on the next week. That's why I think that it's not time to take the long position right now. I can't exclude that market still could proceed slightly higher. Well, slightly I mean in terms of the weekly time frame chart, but on the daily time frame that could be not just slight action, that could be approximately for 50, maybe 100 pips to the upside, 100 pips to the upside. Still, the area around 138.30 level is an area where we should search for reversal patterns, particularly probably on the daily time frame chart. Because the daily time frame will be the short-term time frame for the monthly and weekly, and some pattern probably should appear right here. Maybe that will be some sort of I do not know what we could get here. In fact, well, head and shoulders. Well, if it will be the left shoulder, that could be head, right shoulder, something of that sort, or maybe we will get something else. It's difficult to say right now. But personally, from the medium-term perspective and the perspective of the next week, I do not want to take any long-term position here. And probably it's better to search the possibility to enter short due to you can see that a lot of different patterns and levels coincide in the tight area. That is significant. Also, on the 4-hour time frame chart, we see that this is weekly pivot resistance 1, stands 137.69 now it's in market. The weekly pivot resistance 1 stands 137.68. So that's red line. On the hourly time frame chart, in fact, I did not see much. Well, guys, this could be treated as the double repo sell, but probably better to treat it as the look line, because you can see that major thrust consists just of the 3 candles to the upside. We have 1, 2, 3, 4, 5, 6, 7, 8 bars to the upside, but the major thrust consists of just 3 candles. That's not the thrust that should be with the good looking double repo. Double repo should show that gradual thrust with the number of approximately equal candles to the upside. We see that we need to see some pressure on the market, but not the just reaction on some data. But here we particularly have the latter. Well, that's why this probably will work, and market could reach the 50% support with this thrust up. This double repo sell could in fact reach the target, but this thrust is not perfect. That's what I see in the short term. But our major concern stands with the daily picture and with this area. Keep in mind, now you could understand why the big picture is so significant for us. Because if you do not know that we now stand at the yearly pivot resistance 1, if you do not know that we stand at the major 618 resistance on the monthly time frame, and in fact the agreement with the 618 extension of the monthly ABCD pattern, also you take a look at this daily ABCD pattern, you probably in this case you probably will watch the possibility to enter long. But my thought is that I think that this reaction to the upside due to non-farm payrolls data is overestimated to the upside, and it's too positive compares to the data that has been released. And my thought is that in the medium term we need to watch for reversal pattern in this area.